I think that this is a very exciting time for private equity investing in Africa for a couple of reasons. I think what I would say is that the increasing interest in Africa derives from two sources. I think you've got push factors and you've got pull factors. I think on the push side, in the 15 or 12 or 13 years between 2010, the global financial crisis, and a couple of years ago, you had real outperformance in US and European private equity, but substantially all of that outperformance was due to falling interest rates, which of course made debt more available and cheaper, and also with declining discount rates, valuation multiples were going ever higher. So now with that era somewhat behind us, or I think obviously behind us, investors are now interested in markets that are first uncorrelated to the markets of the United States and Western Europe, and where the underlying rates of growth are just stronger. And so naturally that leads to markets, Africa, for example, being prime amongst them. In recent years, India has been capturing a lot of interest, but as the relationship between India and the United States seems to be fraying, a lot more interest is actually being diverted towards the African market. So what we see is growing investor interest in Africa. And on the pull side of it, in terms of the attractiveness of the African market, first of all, as you know, we have extremely interesting and exciting demographics, which, create sort of a good baseload of underlying growth. And we have the trend of urbanization as well, which drives productivity increases. Now, you might argue that neither of those two things are new. They've been happening for quite some time, and they'll happen for for a bit long, for more than the rest of our lifetimes. But what is really new, actually, is technology, and this overlay of technology on the demographics and urbanization trend is really having profound impact across many industries in Africa. It's lowering the cost of doing business. You look at financial services, for example, where rather than building bank branches and having people queue up at counters, all of the transactions and savings can happen on the mobile phone. So costs are coming down, addressable markets are growing, and you're really seeing the investable universe for private equity expanding quite dramatically. So that's what excites us. We invest at the intersection of demographics and urbanization trend on the one hand, and technology and innovation on the other hand. So within that space, that overlapping space, we see huge amounts of opportunity, and we're extremely excited.
Do you think, Tope, though, that there needs to be more development of the secondary markets across the continent in order for, I know Helios is an Africa-focused firm, but for other firms to look at some of the opportunities here, especially in comparison to what they could potentially get in developed markets? The
way we view our role in private equity, certainly in Africa, is our job is to actually identify opportunities, create, put businesses around them, create, strong, well-governed, growing, cash-generative businesses, and hand them over to the rightful owner, which is usually the public markets or strategic investors, strategic buyers. And so when we look at the history of our firm over the last 20 years that we've been doing this, I would say probably 50% of our exits have been to strategic buyers, global multinationals. And about 40% has been, in public markets. We've listed businesses on the Nigerian Stock Exchange, the Kenyan Stock Exchange in Nairobi, the Egyptian Stock Exchange. But on the other hand, we've also exited 3 businesses on the London Stock Exchange, being the larger, more geographically diversified companies. So the development of a secondary market is a sign of a maturing market, but we don't think it's necessarily the sign of a healthy market. And so we're quite happy with the quality of exits that we have and the transitionary role that we play as providers of capital, know-how, and value add to build really high-quality businesses.
Are you expecting more exits in the near term? I know you can't divulge too much, but what can you tell us?
Yeah. We are. In fact, we just in the last couple of weeks signed an agreement to sell one of our businesses actually in Nigeria, a very large business, for a meaningful amount of capital. It's been quite a successful investment for us. It's in the energy transition gas infrastructure space, which is a space that we continue to believe in, although for various reasons, strategic reasons, we have opted to no longer invest in that sector. But we're very proud of that investment. It's created a real champion, and we think it's got a lot of scope to expand, not just within the Nigerian borders, but also across the West African region.
So I imagine that's on the horizon then for Helios, potentially to go back into Nigeria?
Absolutely. We've got an excellent pipeline now, but pretty full pipeline actually of investment opportunities. Nigeria is let's say punching at its weight in that pipeline. But also other places. I mentioned the investment we just made in Egypt in the data center space. We've actually just signed another investment, which is I believe in the public domain, to acquire the largest exporter of frozen strawberries from that country. Interestingly enough, Egypt is actually the largest exporter globally of frozen strawberries. This company in particular is the leading player in that space. And in a world where there's a lot of concern about tariffs and trade barriers, we think from a pure comparative advantage standpoint, that business, stacks up very well. So we're excited about Egypt. Morocco, we've been quite busy in Morocco over the last several years. That remains a very interesting market, as does Kenya, which you alluded to earlier.